Mario Singh, co-founder and CEO of FX1 Academy, joins us live from our Asian headquarters. Mario, let's come to you then on the subject of Greece. It seems there's plenty of talk about what plans might be put together. People I've talked to about this, though, say from a foreign exchange perspective, a deal could be a short-term stabiliser for the euro, but long-term, any kind of deal is actually quite a negative because of what it says about the risks for the bigger economies in the eurozone.
Hi, Anna. Well, Greece is starting to see some light at the end of the tunnel right now with the EU coming out saying they're going to support them in a little bit of a bailout, although nothing is really at a definite stage at this point. But it's certainly a lot clearer from their fiscal standpoint that they might come up with a bailout of, say, $25 billion. Now, that's going to be happening sometime this week. So markets are having a little bit of a stabilization. We're, in fact, starting to see bond yields and credit default swaps starting to narrow in terms of their spread. So that's going to be something good in the short term. How it goes in the long term, I feel it doesn't really help their case because George Soros, billionaire investor, just like 6 hours ago mentioned something like the euro may not survive the Greek fiscal debt issues.
Let's have a look at some of the data we've got out this week, Mario, and some of the key economic events, because it's a really busy calendar. Non-farm payrolls, employment report at the end of this week. But before that, we have a number of interest rate decisions from central banks. Where do you see the markets being caught off guard?
I think for the bulk of this week, we have like 4 central banks meeting this week with Euro, the BOE, Canada, and especially the RBA. Well, I do see that Canada, Euro, and the BOE, they're going to keep rates constant at where they are now. It's going to be a real tussle for the Reserve Bank of Australia, whether they're going to be keeping rates constant at 3.75 or hiking it at 4%. It's going to be quite an even tussle between the two. But Governor Glenn Stevens himself is probably, I feel he might raise rates to 4% going into the interest rate decision tomorrow.
So if you're expecting an RBA rate hike, ultimately, what about other risk events? We've got China's NPC, CPPCC that we've been talking about. We've got the jobs report, a lot of risk events, and yet which currencies, especially within the Asia Pacific, do you think that'll benefit from these events?
I feel at this point, in fact, I'm talking about the whole of Asia, Australia is going to be a very, very strong trading partner, at least for China, who has led the world out of recession in the last, say, 6 to 8 months. In terms of Australia, why do I feel that it's going to raise rates? They've had stupendous corporate profits coming out of, say, BHP or even Woolworths. How this affects Asia, let's look at South Korea, where their trade, they increased by 31% to $33 billion. So I do feel that this is going to be a real synergistic move between Australia and Asia.
Parity, this Aussie dollar parity, we've been hearing about it, but it hasn't really materialized. So is that going to happen pretty soon?
I feel it might still happen at the end of this year. There's just going to be some movement simply because China is having a lot of problems with their credit reserve ratio in the banks. They just want to try and heighten down to scale down possible inflations in China. But I'm still for the opinion that it will happen at the end of this year.
We'll check again late this year.
Sure.
All right. Thank you so much, Mario Singh, co-founder and CEO of FX1 Academy.